Hello, I am Simge. Today we are here to present the investment portfolio we have carefully created to evaluate our company's current capital of 3 million Turkish liras the most efficient way possible. This portfolio was initiated on January 6, 2025, marking the beginning of our investment journey. Over the next 11 days, we have strategically managed and analyzed the portfolio with the aim of achieving our financial objectives. As of January 17, 2025, the portfolio has reached its completion, and we are excited to share the results and insight with you. Let's dive into the details of portfolio and reasoning behind our strategic decisions. In this study, while creating the investment portfolio, we carefully consider systematic and unsystematic risks, along with analyzing the country's welfare level, its political relations with other countries, inflation rates, and the potential profitability of investment instruments. As a result of these evaluations, the following 5 instruments: 1. Stocks, 2. Foreign currency, US dollars, 3. Bonds, Turkey and UK, 4. Gold, 5. Time deposit account. Explanation: Stocks. Stocks were chosen for their high growth potential, inflation protection, and regular dividend income. By selecting companies from different sectors, Akbank, Tatgıda, and Vestel, we achieved diversification, reducing portfolio risks. Following the market segmentation theory, we focused on growth-oriented sectors to maximize returns. The strong financial performance, future growth strategies, and positive expert evaluations further supported our decisions. Additionally, stocks provide liquidity and allow us to benefit from diverse sector performances. Firstly, why we choose Akbank. Akbank has a financial stability, interest rate advantage, technological innovation, regulatory adaptability, and stock performance. Akbank beta is 1.06, and Akbank volatility indicates a risk level slightly higher than the market average. This is typical for financial stock, as they are sensitive to economic and interest rate change. Recommendation: a good option for investors seeking moderate risk and steady returns from dividends and financial growth. Secondly, why we choose Tatgıda. Tatgıda has a stable demand, market reach, brand strength, sustainability, and dividends. Tatgıda beta is 1.03. Volatility: low beta value shows that Tatgıda is less influenced by market fluctuations. This makes it a stable investment, especially during economic downturns. Recommendation: ideal for conservative investors looking for a low-risk asset with steady performance.
Hi, I am Ceren, and I will continue with Vestel, which is the third stock. We choose Vestel because of Vestel has technology and innovation, export strength, local leadership, sustainability, and stock performance. Vestel beta is 1.26, and Vestel's volatility beta indicates a higher level of volatility compared to the market, reflecting its exposure to the technology and export-driven electronic sectors. Recommendation: suitable for growth-oriented investors who are willing to accept higher risk in exchange for potential higher returns. Why we choose foreign currency USD. USD was selected for its high liquidity, global acceptance, and role as a safe haven during economic uncertainties, with an upcoming debt obligation of $30,000 on May 2, 2025. Holding USD reduce currency risk and ensure readiness for liabilities. We choose Turkish and UK bonds. Turkish bonds has high interest rates, offer attractive fixed income as part of an emerging market. No currency risk. Turkish lira bonds eliminate currency fluctuation risk. Government guarantee. Turkish bonds ensuring low risk and high repayment assurance. Liquidity. A highly liquid market enables quick cash access. Diversification adds a stable income source and changing portfolio diversity. UK bond has a low risk, backed by the stable UK economy and high credit rating, global reliability, highly trusted in international markets, currency diversification, pound-denominated bonds enhance portfolio resilience, low inflation risk. UK's low inflation prefers bond returns real value, predictable income, fixed rates provide long-term income stability, global strategy supports international diversification and maintains foreign currency exposure post-BSD payment in May 2025. Why we choose gold? Inflation hedge protects against inflation and economic uncertainties. Portfolio diversification, independent of currencies and monetary systems. Liquidity, easily converted to cash when needed. Risk management, lower volatility ensures stability in the portfolio. Strategic value, global demand and sectoral diversity make the gold a key asset. And the last one, we choose time deposit account because time deposit account has secure and predictable fixed interest rates and guaranteed returns. Low risk, bank-backed stability balances higher risk assets. Liquidity alignment, fixed maturity ensures predictable income and access when needed. Higher returns offers better rates than regular savings accounts, optimizing annual cash. And this is our beginning portfolio. You can see how much money we allocated to which investment instruments and how much we bought for it. In our beginning portfolio, we divided it as 16.67% for commodity, 23.33% for foreign currency, 16.67% for common stock, 10% for bank deposit, and finally 33.33% for bonds.
Hello, I'm Nil. I will continue with our portfolio. Summary: Vestel demonstrated improved profitability and financial health in 2024. However, the decline in assets turnover suggests that there is room for optimizing resource utilization. Summary: Tat Gıda faced declining efficiency and profitability in 2024, coupled with increasing financial leverage. The company may need to focus on cost control and improving asset utilization. Summary: Akbank showed stable liquidity and improved operational efficiency, but the decline in profitability ratios warrants attention to maximize returns for shareholders. Here are ending portfolio. Portfolio performance. Our portfolio demonstrated positive performance between the start date of January 6, 2025 and the end date of January 17, 2025. To answer how to pay the debt on May 2, 2025 based on a portfolio provided. First, current USD holdings. Since USD was included in the portfolio specifically to meet the May 2 obligation, it's logical to assume that a portion of the $30,000 needed is already held in USD. This mitigates the risk of the exchange rate fluctuations. Second, will you buy USD later? If the current USD holdings are insufficient, additional USD may need to be purchased closer to the deadline. Given the portfolio's strategic inclusion of diverse assets, this would likely be achieved by selling liquid assets such as stocks or Turkish bonds. If exchange rates are favorable in the lead-up to May 2nd, preemptive purchasing could occur to lock in rates. Third, which security to sell? Stocks, Akbank, Tat Gıda or Vestel stocks could be sold, as these are likely more liquid. The choice would depend on their performance relative to expectations. Turkish bonds. These provide highly liquidity and could be sold without significant loss. depending on market conditions. Fourth, future expectations on portfolio. After the USD payment, currency diversifications will be rebalanced using UK bonds as indicated in the portfolio strategy. This aligns with maintaining exposure to foreign markets while diversification currency risk. The portfolio will continue to benefit from gold's stability, time deposit accounts, predictable returns, and the diversification risk across sectors in the stock portfolio. Anticipated market trends, particularly in inflation and interest rates, will guide reallocation strategies post May 2nd. Conclusion. The portfolio is well prepared to meet the USD obligation. If additional USD is needed, liquidity assets like stocks or bonds will be prioritized for conversion. Post-payment, maintaining diversification through UK bonds and strategic reinvestment will be critical.
Thank you for listening. Thank you for listening.